Get to our next guest. He is Stephen Mnuchin, is of course former Treasury Secretary of the United States, Liberty Strategic Capital founder as well, private equity firm he runs. Stephen, good to see you this morning. Obviously, in our morning, we're all trying to make sense of the news. You heard Steve's, I assume you heard some of Steve's analysis. We've been making it as well, as sort of, some say the lack of intellectual rigor behind the numbers themselves, which really seem to just be whatever they wanted them to be in order to perhaps stop trade with certain countries and, I guess, create a manufacturing base in this country that is far larger. Do you think it's going to work?
Well, let me start off by saying the president's been clear in wanting to redo the trade agenda. And I think if you look at his economic plan, which is tax cuts, regulatory relief, trade, and energy, there's no question that the trade agenda is more aggressive than it had been in the past. I really break it into two pieces. One is the 10% across-the-board tariff, which, as I've commented on, that is a form of a consumption tax. I would suggest that they put that into the reconciliation bill and score it and use that money to pay down debt or fund tax relief. And I do think the market can adjust to a 10% tariff. It'll be partially adjusted in costs. It'll be partially adjusted in the currency. I think it's the larger tariffs that are called the reciprocal tariffs. I'm hopeful that those will be negotiated down, that those are tariffs that will bring people to the table and will negotiate them down. Now, for many businesses, it takes a while to move the manufacturing base. Apple's announced big investments in the U.S. That's going to take a while. I hope the president will consider giving people credits for those people who actually have made real commitments, not just announcements, but real commitments to build in the U.S., because there's a transition period here that needs to be adjusted to.
Yeah. Stephen, I'd love to, use your experience to get an answer to this. I mean, you are credited with navigating the Trump administration during your 4 years as Treasury Secretary extremely well. One of those people perhaps that pushed back on certain instincts that President Trump had during the first administration. Do you think that there is going to be a willingness to negotiate here? Or is this simply a reflection of what the president perhaps wanted to do in his first term when you were Treasury Secretary?
Well, the fact that they've characterized it as there's a baseline tariff and there's a reciprocal tariff, I hope that is that they're broadcasting they want to negotiate, and that on the reciprocal portion of this, they want to lower trade barriers and other items. And if we put aside how it was calculated and we just say these are very high tariffs, I do hope there's the ability to negotiate them down, because as we've seen, for certain businesses, it is going to take a long time to move that manufacturing base. And we've seen the stock market, particularly in certain stocks, react pretty negatively.
Right. I mean, I don't think we can put aside the way they were calculated, though, if we're talking about negotiating them down. David was kind when he said they lack intellectual rigor. They're not facts, right?
And again, I'm just looking at this morning. I believe they were calculated on a mathematical basis.
Yeah, no, they divided the deficit by the imports from that country, right, and decided that that number was equivalent to all the ways that the countries are cheating us, which is not true.
Well, they've made a conclusion that the market is efficient, and if there is a trade deficit. But again, I wouldn't focus on the way they've calculated it. I would focus on the numbers are quite high, particularly when you add up the existing tariffs on China and others in places like Vietnam. And I think that hopefully this will be a negotiation of let's get to the table, let's negotiate fair deals. I mean, I think as we've talked about on China for a long time, the tariffs were the only thing that got China to the table to negotiate. And there's no question that China's market has been closed to us for a long time, and our market's open to them. And if we could rebalance that and we could create an opportunity for U.S. companies to do business in China with a growing middle class, that's a big opportunity. So if these are forcing people to the table, it will be effective. If we stay at these levels and we don't issue credits or we don't negotiate, it will create big concerns for certain businesses that just can't move their supply chain quickly.
Well, yeah, like Apple, which of course makes an awful lot of iPhones in China, and it's hard to imagine them being 54% more expensive for the U.S. buyers. Stephen, you're in the business now of allocating capital. You run a private equity firm. You know, I'm curious. You're hoping that there's going to be a negotiation period here. Are you sitting on your hands right now as you sort of wait and try to determine what the right time is? You know, as somebody now who's in that business of allocating capital, does this give you pause?
I don't think it gives us pause. I mean, now that this is out in the market, people can evaluate the effects, and people can make a judgment as to where they think this will land and can invest accordingly. So I think it's good news because there's been a lot of speculation as to what this was going to be. I think now at least we have transparency to what it is. And look, I know the president. The president is a great deal maker. And I think we should take it at face value that these reciprocal tariffs are meant to create a fair and level playing field. And that will require negotiation. And I think there could be, some pretty significant things. As I mentioned, if Apple makes a big investment, it'd be interesting to say, OK, we'll give you trade credits against your iPhone so that you don't have to raise the iPhone price for consumers by the tariff.